What's up, everybody? Welcome to the Stocks channel. My name is Corey. In tonight's episode, we're going to be doing some stock market technical analysis. We saw a broad stock market sell-off today, and we're going to do some analysis tonight to see if that selling is going to continue or if we're going to start heading higher now that we finally had a dip. Before we jump into the charts, please help me out by smashing that like button and go ahead and subscribe if you're new so you can follow along with all of my daily updates. First up, we'll look at the S&P 500. So let's crack open this chart and see what's going on in the stock market today. Alright, so if you remember from last night's video, I said that we went too far too fast and we were due for a cool off. So yesterday we hit resistance on the S&P 500 at the previous all-time high, and we did close above our important trend lines. Now if you're new, these trend lines go back decades, so they're very strong resistance levels and they have been very critical in calling the market tops. We saw last time we had a false breakout from this level that was followed by a huge correction to the downside. So this time, was it a false breakout? Because we did get a close above that trend line yesterday, and it looks like we are starting to pull back from those levels. Now we have our other trend line from the high of 87 and the high of 2000, and it looks like we may have closed right on top of that trend line today. Now at one point on the S&P 500, we were trading below the 5 EMA, but we did close higher, which is actually a pretty decent bullish price action close. So while we did get rejected from the previous all-time high, it's possible that the bulls are buying in at the first sign of support, which is this 5 EMA, and we could head higher and try to break through that level once again. Remember, the more times we test this resistance level, the stronger it gets, but it's also possible that the bulls are ready to break through. So going back to September to now, we've now tested this trend line 3 times, and it could be strengthening for the bears and we're about to see a huge sell-off, or the bulls could be finally ready to start breaking through this level and start heading to new all-time highs and start another bull market. So let's go ahead and jump over to the SPY ETF, and from this move from the lows, we see that we have our Fibonacci retracement level somewhere around $354, and we did close below that level today. So our next support level was the previous daily higher high on this chart, which was 352, and we did get a close above that level. So right now, following the price action, we have to see that we're closing above the 5 EMA and this support level, and for now, that is a bullish sign. Now, if we close below that level tomorrow, our next support level is going to be the 0.382 Fibonacci retracement at 348, and don't forget about our resistance trend line that we've broken out of could now act as support. So by tomorrow, this 13 EMA could come up into this level, and if we continue down, we could find support off of that 0.382 Fibonacci retracement level and then start getting a bounce. But don't forget, this market has extreme bullish price action and extreme bullish trending. So it is possible that this was the dip and we're going to start bouncing off of this support level and make another attempt at new all-time highs. This is what a market melt-up looks like, and market melt-ups are not something you should be trying to rationalize. They happen for all kinds of different reasons, but the point is there's a lot of bears in this market right now and there is a lot of cash on the sidelines. So any sign of bullish price action could lead to short squeezes, and it obviously could lead to retail FOMO, and we could start to see this market melt up and head higher. We're really not that overbought right now because we went so far so fast. We had a lot of gap ups in this market, and on a lot of momentum indicators, we're really not very overbought right now. So it's completely possible that this market melts up, and only time will tell. Now, I'm not saying we're definitely getting a melt up, but this was a bullish close because the bears could have easily drove the market lower if they were able to. We got the close above support and the close above the 5 EMA, and we're still in this critical trendline resistance area where the bulls could start breaking these levels of resistance any day now. Remember, don't chase false breakouts, and if we do get a breakout, we don't want to chase it and we don't want to FOMO in. We want to wait for that breakout, ultimately wait for the test of support, and then if we get the bounce, we'll know that we're going into that bull market. It's very possible that the stock market can correct through time, and there's no guarantee that we have to come down for the stock market to cool off. We could trade in a sideways fashion where we just sort of bounce around in this area, but ultimately the trend could still be heading higher and we could still be breaking through these resistance levels. So don't forget, retail investors are typically wrong, and if there's a lot of bears right now, that could just be fuel to the fire and it could drive the stock market even higher. You can see that we still have extreme bullish price action. We're still closing above the 5 EMA day after day, and this bullish trending is only picking up strength because the 20 simple moving average and the 50 EMA are only sloping more and more to the positive direction. So the trend is very strong in the short term and the medium term, and that trend is usually going to drive the price higher. Next up, let's take a look at the NASDAQ 100 Triple Qs ETF. And we see the NASDAQ 100 did get rejected at our resistance trend line today, which was a price level of about 291. We did come down below the 5 EMA intraday, somewhere near that 0.382 Fibonacci retracement, but we did close above the 5 EMA. So the NASDAQ 100 did find resistance, but the price action is still bullish and we're still closing above the 5 EMA. Don't forget the NASDAQ is a little different than the S&P 500 because we had the dip a few days ago and we did come all the way down to almost a 0.618 Fibonacci retracement at 279 before we started bouncing. So it's completely possible that tech is not in the same cycle as the S&P 500, and if tech starts breaking and closing above this resistance trend line, we could be going back into a bull market on the tech sector. Remember, we're still in this consolidation wedge, and when we're in a consolidation wedge, we don't want to make any guesses on which direction the stock market is going to break. So we did get rejected at resistance today, and it's still possible that we could come all the way back down and close these gaps and bounce off of this support trend line below before heading higher. But don't rule out the possibility that this was the dip and that was the buying opportunity, and the bulls are ready to break out to new all-time highs. So we are generating upside price targets on the NASDAQ 100 Triple Qs ETF, and the first price target we have is this $300 level. Now, in order to get to that price target level of $300, we do have to break this resistance level at about $294. If we break above there and get to 300, our next upside price target is somewhere around $312. So to the downside, we're looking somewhere around these Fibonacci retracement levels and the gap close at 276, and we could find support at the trend line below at 274. If the bulls start breaking resistance and heading higher, we're looking for price targets of 294, 300, and 312 on the Triple Qs ETF. Next up is the Dow Jones DIA ETF, and the Dow Jones also looking pretty bullish on the price action today, having the opportunity to close below the 5 EMA, but eventually bouncing off of this gap and closing higher above the 5 EMA. So we did get a 0.236 Fibonacci retracement on the Dow, and we did squeeze that gap below just a little bit. So as we know, gaps typically get filled on these ETFs, but there's no guarantee of what time frame this gap has to get filled. On the Dow Jones, the gap will get filled at a 0.382 Fibonacci retracement level of around $285. But don't rule out the possibility for a melt up on the Dow either, because there's still a lot of bears trying to predict what's going to happen to the stock market, and a lot of them are trying to short at the worst possible time. When we have extreme bullish price action and extreme bullish trending, that is probably the worst time to get overly confident on a short position. If you're shorting intraday, getting in and out, or over short time periods, you're probably doing pretty well right now, but don't get overly confident and try to hold a short position for the long term. This market is absolutely in melt up mode, and it doesn't take much to show you that. Just go back to October 30th and look how far we have come in such a short amount of time. There's no guarantee that this monster bull move is over, and we could continue this melt up for a little bit longer before we need to have that cool off. So this short-term cool-off that we saw today was necessary, and we did talk about it in last night's episode, but now that we've had it, it's completely possible that all the momentum indicators have cooled off and we continue to melt up. So to the downside, we're looking for the gap close at 284 and possibly find resistance at that level and our support trend line. To the upside, we're looking for the previous all-time high at 296, and if we could break out to a new all-time high, watch out for that false breakout, wait for the test of previous resistance as newfound support, and then on that bounce, if we continue higher, we'll know that it's the real deal breakout. Next up is the VIX, which as you know is our fear indicator, and we see the VIX did spike over 8% today. So fear is definitely coming back in the short term, and we did break back above our support line at 24.8. So as to be expected with a stock market sell-off, we did get a spike in fear and a spike in volatility. So the question is now, is the VIX going to continue to go higher and possibly test our previous resistance trend line somewhere around the low 30s? Or was this just a one-day sell-off and we're going to see fear start bleeding out and heading lower soon? Only time will tell, but we don't want to rule out any possibilities right now. If there was ever a better time to be in cash, now is the time, because there's a lot of uncertainty in this market and the market is acting very extreme bullish, which as you know is an irrational behavior. The stock market should not go up in a straight line like we've seen, but just because it shouldn't do that doesn't mean it can't continue to melt up. Next up is Apple stock, and we do see that Apple did break out of our resistance trend line, which could now act as support. We're still closing over the 5 EMA, and the bullish trend is only picking up momentum. We see that 20 simple moving average is a little flat right now, but it could start sloping to the upside, and this bullish trend could start picking up momentum. So right now, Apple's looking very bullish. We have bullish price action and bullish trending, And as you know with Apple, it is our market moving stock. So if Apple's heading higher, the rest of the stock market is likely going to go higher with it. Next up is Tesla stock, and the bulls are still on vacation because we're still going absolutely nowhere. We're still closing over the 50 EMA, but the trend is very flat, and Tesla as a whole is a very neutral stock right now. So Tesla's looking pretty flat right now, and I wouldn't gamble on Tesla going higher. Just be patient and let's wait for the trend to pick up momentum, and we're going to see if this thing is going to break out to the upside or the downside very soon. Next up is Nvidia stock, and we saw Nvidia bounce off of support 2 days ago, and we did get that bullish close above all the moving averages today. So it's possible Nvidia found its support level and it's heading back to its previous resistance at 571. It's still maintaining the bullish trend and it's closing above all the moving averages, which is bullish price action. So right now I'm going to give Nvidia a price target of $571 in the short term. Remember, if Nvidia breaks above that, we want to see that level act as support and get that bounce, and we could see Nvidia continue to run into a new bull market. Next up is Boeing stock, and Boeing is finally getting that cool off that we were expecting after this monster move, and we're waiting to see if Boeing's going to hold up above the 200 simple moving average. So with today's price action, we can see that Boeing failed that test, and we did get a close below the 200 simple moving average. However, there is some silver lining because we're still holding up above support and the 5 EMA. So it's possible Boeing can get another chance to prove itself, and what we're really waiting for on Boeing to go long is wait for a break of the 200 simple moving average. Ultimately, the price should come back down, test that level, and get a bounce and start heading higher. This is by far the best opportunity to go long on Boeing, and until we see this happen, we're just going to be patient and wait to go long on Boeing. We were buyers down here and sellers up here, and we just want to wait for another entry opportunity because as we know, with false breakouts, they've been all over the stock market, and until Boeing proves itself, it's not worthy of our money. Next up is the US dollar, and we see the dollar really going nowhere today, still closing below the 20 simple moving average and in that bearish trend. So right now with bearish price action and bearish trending, we have to go ahead and give benefit of the doubt to the dollar bears, and it looks like the dollar is going to continue to head lower and continue to weaken. A weak dollar should be a strong stock market. Next up is gold, and gold is still holding up above that 1860 support level, and we're seeing a short-term bounce. We have to be careful though because this support level could break, and the trend is still looking very bearish right now because all the moving averages are actually stacked to the bear side. So the price action's looking good, holding up above support, but the trend hasn't proven itself just yet. If we break below the 1860 support, gold could be heading to the next support level at 1809. Next up is silver, and silver still consolidating with all the moving averages sort of consolidating right around the same price target. So silver is getting ready for a big move in either direction, and we just want to be patient and watch if it's going to be an up move or a down move. We don't want to make any guesses, and we just want to watch the price action. Next up is Bitcoin, and we see the volume of Bitcoin is picking up on bullish price action, and we finally did get a break of that consolidation wedge to the bull side. So it looks like Bitcoin's going to have no problem getting to our price target of $17,000, and it looks like at this rate we're going to get there any day now. Now, once we get to our price target, it's possible that Bitcoin needs to cool off a little bit. So I wouldn't suggest chasing Bitcoin at these levels. If you're not already a buyer of Bitcoin, maybe just be patient and look for a buying opportunity at the next dip. With the financial sector, we see bullish price action and we still have bullish trending. With the industrials, we're still closing above the 5 EMA and the bullish trend is still very strong. On healthcare, we're still closing above the 5 EMA and the bullish trend is still trending very strong in the up direction. So all the sectors are looking bullish, and if tech starts joining this party and starts heading higher, we're likely to see the S&P 500 continue to melt up and possibly go to those new all-time highs. So going back to the S&P 500, just be patient on this market and don't try to make any big moves in either direction right now. Yes, it is possible that the stock market is about to sell off, but the fact that everybody thinks the stock market needs to sell off makes me think we're more likely going to see a melt up. Remember, the more bears in the market, the more likely we're going to get a melt up because we're going to get short squeezes and we're going to get retail FOMO. So be patient on this market, and if you're not sure what to do, there's always the Stocks Channel Discord, which you can find out how to join in the description below. The other way to play this market if you're not sure what's going on is just stay in cash and wait for more clarity. This is not the time in the market that you want to be trying to guess what could happen because the market is volatile and we could have huge swings in either direction at the drop of a hat. So please remember to help me out by smashing that like button. And if you're new, go ahead and smash that subscribe button so you can follow along with all of my daily updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.